Okay. All right, man. So this is what scared me today. So this was today's candle. Today's the 4th, right? Yeah. So we're just going to talk about the market. Again, this is the S&P 500 futures contract, the ES mini. So it tracks the S&P 500 as well. So what's scaring me is we're probably going to see price action come down and hit this moving average. And mainly because price action is currently, this is after hours, it's crossed below that 50. And the 50 is basically the benchmark for between bearish and bullish. So anytime you see price go below the 50, you kind of got to get a little bit worried. I think that's what I put in the video the other day when I sent it to you guys in the group chat. But it's kind of violating these areas that we saw before. Violated this one, violated this one, violated this one, which is basically meeting up with the 50-day moving average. So we got another pivot level, violated that one. So it's not giving a damn. So we could come down to here and then probably more so down to this moving average. So it's 3680. So that's how you can just kind of tell where things might go. You know, remember that price attracts back to previous pivot levels. Old resistance can become new support. And it's the same thing with downtrends. So, I mean, we can see after hours, this thing's just bleeding. So I was bullish up until, okay, so it tested here and then we got that big price action. But then when these past 2 days, I was extremely bearish. I was afraid that this big momentum candle would break through, and which it did. And that's when I started to perk up and be like, oh shit. So I'm all cash at the moment. I have no open positions besides long-term holds. Let's see here. Oh, Miss Vanessa, we'll go ahead and admit her. Hey, how's it going, Miss Vanessa? Welcome, welcome. We're just kind of going over the S&P 500 futures contract. We're just kind of analyzing where price could go. This is already the after hours market price action. As you can see, it's already going lower than March the 4th, which was today, close. So, I mean, this thing is bleeding even after market. This is an intraday time frame. This is a 1 hour chart. So this is a much larger time frame. Let's go to a 5. And look at that. All that momentum's coming back, testing this resistance, and just continue to bleed. So if you guys have any open positions, hopefully they're buy and hold long term. Should get a lot of things at a discount if you're averaging down. And that's just where we are, man. So, but today we actually have a topic. We're gonna go over order entries for swing trades. This will work in a bearish market, bull market. It doesn't really matter as long as you're trading swing trading or intraday trading. We're going to go over using a buy stop limit order. That's actually the best way to get into a position because you're setting your first order, which is the buy stop limit, your second order, which is the sell stop. That's your protective stop in case things go in the opposite direction. And then you got your third order, which is your target. So that'll be triggered as the last order to be filled if all of the criteria gets hit. So, and then I got some rules for you guys for entry. You got 2 different techniques using the ATR. You guys, if you look at the swing trading hot list, you'll see that I'm always putting like 10 to 25% of the daily ATR above the candle high or the confirmation candle. That's just so that you get caught into the movement. So for example, if we were bearish on this and I wanted to get in here, my buy stop limit would be somewhere 10 to 25% below this level. So I would only get triggered in if price went below or where I specified. So the buy stop limit order would be here. Let me change this. My stop would be 10 to 25% up here, whatever that my entry candle was. So this is entry, this is stop, and then my target would be, of course, somewhere down here. And this is a bearish example. I'm just looking at this right now because, you know, that's the momentum and it's live. So I think it's a better example. But if you wanted to do the same concept applies for bullish, you just flip the chart around. So this would be, let's see, this would be entry. which is a buy stop limit.
I have a question, not right now, but whenever you finish going over this, I think you did an excellent job of explaining this in the private group chat earlier. So I wanted to have you reiterate it for us. Just let us know whenever you're ready.
Absolutely. Was it about the covered calls?
That too, but more specifically, I was wondering, so, if you could just kind of recover, how do we know whether it's a bull market, a bear market, recession, and depression?
Oh, yeah. Okay. Yeah. So verbally, basically, the definition of a bear market is 20% from the high. So I'll show you what that is. So basically, from this high to the low would have to be an equivalent of 20%. So 20% of this number, 20% of 39, 3,959 and 25 cents.
And this is the NASDAQ?
This is the S&P 500.
Oh, okay.
Mm-hmm.
Okay.
So I basically use the S&P 500 as the benchmark because it's the heavily weighted one. I mean, it's most heavily weighted because it has Apple and all the things, Facebook, Amazon, Apple, Netflix, and then Google in it. So that those actually they basically carry the whole S&P. I mean, it's full of tech stocks. So tech has been one of the hottest sectors of the market for the past 11, 12 years. So that's why you kind of use it to see where the overall market is going. And there's a saying out there, it's rising tides raise all boats, or they can also sink all boats too. But whenever the S&P is going up, you can kind of go out and see that other stocks will be rising as well. Same thing in the reverse. When the S&P is going down, you'll go into individual stocks and you'll see that they're correlating with the price action of the S&P 500. Even if they're not in it, they can still correlate. Most of the times you'll look at the charts and you'll see that it's actually making the same pivots and patterns at different price points as the S&P 500. That's how much correlation there is.
Well, okay, thank you. Because if I'm being completely candid, up until this point, I've been hearing people use the term bear and bull, and I kind of had a gist of what was going on. But now that you gave me those exact, like a way to calculate it myself, that's tremendously helpful. So thank you so much, and please continue.
Absolutely, no problem. Actually, I'm gonna pull up a stock because with that, I mean, I'm gonna just pull up a stock. Y'all have a stock that y'all want me to look at, or just pull one up? We'll do Disney. Let's see. Oh, this don't have my chart on it. Let's see.
Ooh, you want to do TTOO for me?
TTOO. Let's see here. I'm gonna just put ATR in there.
While he's doing that, how's everybody? I mean, I know we're all kind of going through it, but in actuality, how's everybody doing though? It's not too bad for you guys, huh? Kylon, Steph, Carlos?
No, it ain't too bad. Just kind of just hanging on, averaging down where I can, just kind of wait for things to slow back down and just let it go back up.
Yeah.
And doing the same.
Most of my stuff's long term. I got a couple of short terms, but I'm not too vested into it, so it ain't really hurting me.
Yeah, there you go. That's a great positive attitude to look at it.
It is. And that's what I'm also learning through this whole thing. And I will say, honestly, last year about this time, I want to say almost the exact same thing happened. Now, again, I know that, it depends on what stocks are in your portfolio, but to me, at least, this exact same thing happened about this exact time last year. And what I kind of learned that I'm a little bit better at this year is, like Ryan's been preaching, make sure, and also James G in the chat said this too, make sure you have a couple of long-term positions that you're sure about. And it definitely doesn't hurt, especially in a time like this, to have those in your portfolio. It kind of helps if nothing else. So
Absolutely. Yeah. Absolutely. And your portfolio should be split up in 3 different pieces of the pie anyways. You should have your long-term buy and hold investments. You should have a little bit of funds allocated for short-term speculations like trading options and short-term swing trading stocks. And then the third is, I would say, I mean, I talked about it a little bit today, which would be cash flow strategies. And you do that with options. I was talking about the poor boys covered call as well as the covered calls. So when you own a share of stock, you can go in and sell call contracts and collect premium, much like an insurance company. And
wow.
you're basically betting on the fact that the stock price won't get to the strike price that you're selling the option for. You know what I mean? Just real quick, let's say that this had options, which it does, but it's not very liquid. Remember I said on the options class, when you're trading options, you want to make sure there's tight bid-ask spreads. This does not. And then also that there's weeklies. This also does not. But just for an example, you would just go in and click on the sell price here, and then you would be getting a credit. So you would be getting, you see where it says credit here? You would be getting a credit of $9.35 if this expires worthless. So that's when the time decay actually works in your favor. This is actually putting money into your piggy bank as that option gets closer to its expiration date of May 21st, 2021.
Interesting. Now, what's the risk? What's the risk of? So you make $9 if they don't reach that price, but if it does, what do you lose?
Well, most people don't exercise that option unless they're like real far into the money and higher than the premium that they paid, which would be the $9.35 to you. So most of the time, logically, they would have, like if they bought the call, that means that they were bullish. So that means that call option went up in value, right? So they would just sell the call unless they actually wanted to exercise that option and own the stock. They would just resell that call option for a higher value.
Interesting.
Yeah.
So actually you almost don't lose.
Yeah, it's a high probability way of trading, especially on stock that you already own and you feel like you want to keep it. So you basically cash flow in the stock. You're treating it like a rental property, like real estate. You have 100 shares of this ticker here, TTOO, but yet you're selling call options and maybe there's a dividend. I don't know, is this one? It looks like there's a dividend on here. So you got dividends bringing you cash flow every quarter. You got the covered calls bringing you cash flow maybe every 30 days, if that's the contract that you're selling. And then, of course, you're probably going to be feeding the beast. Regardless of what the stock is actually doing, you're probably putting more money into TTO and buying more so you can write even more covered calls or sell more covered calls on it. And then, just it compounds. You know what I mean? Because with those dividends, you're putting it back into the stock. With that premium that you're collecting, you're putting it back into that stock. And then you're feeding that account again and buying more of that stock. So it's kind of like a trifecta, and it could be pretty nice if you do it until retirement.
Wow, that's like so much more to the stock than I initially thought. It's so much more than just buying and selling.
Absolutely. That's why, yeah, absolutely. That's why I say when we're done with the learn to stock people or learn to stockers, I mean, they'll know how to make money, at least have the theory on how to make money, whether the stock market's going up, down, or sideways. Excellent. You know what I mean? So whether it's buy and hold, some concepts we talk about there, cash flowing, or short-term trading.
Hey, Ryan, you kind of lost me a little bit. So
sure.
Just to reiterate, so let's say you own a stock, and it's got to be something that is doing really well, trending good, right?
Yeah.
It's on an uptrend. So if you're gonna sell options, I mean, so you're gonna sell puts against it?
No. So if you own the stock, 100 shares, you can then go and sell a call. So let's say
okay, I get what so I'm gonna sell the option to someone else.
Right.
My shares.
Yeah, absolutely. That's exactly what it is.
Okay, got it. Now that's why I was a little confused. All right.
Yeah, and that's why you're making that money that it's called premium, because they're paying you for the option, quote unquote, to buy your stock at a higher price. You know what I mean? So for this example, it's currently trading at 195. I mean, if there was a call option here, and depending on your broker, you could probably write one. Like they'll create one for you. And if there's a buyer out there, they'll sell it. Okay. So yeah, so ideally we would want it at 750 because there's no way in hell this little yellow thing right here. I don't know if y'all can see my mouse. This is the expected move up or down, plus or minus. So this is only going up or down plus or minus 18 cents. So there's probably no way in hell by or let's see, April. Okay, next month, April 16th, next month, in 30 days, something like that, that this price will get to 750 in that time frame.
Somebody's buying that. That's a real option out right now.
No. I was just saying, for example,
Oh.
ideally, that would be the highest probability option
Gotcha.
or call option that you would sell, because based on this, move plus or minus 18, it wouldn't get there in time.
Yeah, that's not happening.
Yeah, it's not happening. So you would be like, okay, if this was something that you could sell, you would click sell, you would see how much premium you would be getting. Like, just for example, not this one, but if you were to sell this one, you would get $4.35, for giving somebody the option to buy your 100 shares at $5.
Got it.
And currently the probability of it getting to $5 is pretty low because of the fact that it's trending downward anyways.
Okay, thank you. I didn't mean to get you off track, but that clarifies a lot for me. Thank you so much.
Oh, no worries, no worries. I'm gonna stop sharing my screen for a second, and then I'm gonna load up Thinkorswim. This is my paper trade account. For some reason, my tools aren't loading up my studies, so I'm gonna switch to my other account real quick. So I'm gonna just stop sharing really quick, load that up, and then go from there.
All right.
Trying to see if I see any new faces. Again, I kind of missed last week though. I think this is my first time I've seen Steph at Lou in a meeting. I've seen Carlos and Kylan, they're regulars. Has Vanessa been here before?
I think she showed up late last time.
Oh, okay.
Yeah, remember James? She caught us right at the end. We were already closing out.
That's right.
Welcome, Vanessa.
Glad to have you. Did she reply?
Yeah.
Yes, I
Hey,
did.
what's up?
Sorry.
Oh, no worries. Vanessa, since this is your first time actually in the Q&A, did you have any questions or anything?
Nothing. I'm just trying to grasp everything you're trying to say.
No problem. That's a little bit more. That's a little bit more advanced than than we were supposed to touch on tonight, but it was a good kind of
That's all
conversation.
right. That's all right.
So let's see here. All right, let me get and share the screen.
And if you're wondering why I'm wearing this hat, it's actually extremely cold where I'm at in Houston, Texas, at 75 degrees.
Yeah.
I'm feeling cold too.
It's even colder in St. Croix.
Oof, I can imagine.
I'm
man.
jealous. I'm at 33.
Where you at?
You're like 20, New York.
Oh, New York.
Freezing, I bet.
How did you find us, Vanessa, if you don't mind me asking?
Facebook, I think it was.
Oh, wonderful. Awesome. Glad to hear that. Glad to have you with us as well.
One more question. What is actually kind of so I'm sorry, I'm kind of gonna butt in real quick. I'm so curious. If I can go around just real quick to Carlos, Stephanie, Vanessa, and Colin. If you don't, feel aren't in a position to answer, it's okay. But starting with Vanessa, what is to you the most beneficial part of Learning Stock, just so we know what we can improve upon or make more robust?
I mean, as a newbie, I try to listen to what you guys are saying. So I like these Q&A sessions separate from, when you guys sending out the info in the days, because I'm like totally lost. That's what I'm looking at. But with this, then I sort of like have a better idea what I'm looking at, when I listen to what you guys are saying.
Okay.
Wonderful.
Awesome.
Now, I got a question. Is everyone? I think Carlos maybe he's not, but I think everyone else is pretty much just getting started in their investing, correct? Or all you got maybe a year under your belt?
I just got about
Totally newbie.
a year.
I think I remember Carlos saying he had about a year under his belt, right? Already trading.
Yeah. Yeah, I got about a year.
So, man, got to start somewhere.
Yeah, I'm just trying to see where everybody was at. Yeah, well, I mean, fairly new to investing as well.
Okay. Cool. Well, thank you. Colin, if you don't mind me asking you, I know you have like a year or so, right?
Yeah, I right around a year. I mean, I didn't really I kind of just played with it a little bit on my own, and then I just kind of started watching videos and everything myself.
Okay.
And then I found your guys' page, and I just kind of been following information. And to be honest, I really like the alert channel with all the news and everything that comes through. All the main points that you don't always catch or see yourself, and it comes through and it throws stuff your way that you may not be seeing. I think it's really helpful, to be honest.
Cool.
Oh
Appreciate
man,
it.
that's awesome.
Yeah. What about you,
That's
Mr.
good.
Carlos?
Uh,
Most beneficial part of Learn Stock to you, sir?
well, I've been trying to learn how to get in and get out, because usually I've been trying before you get your confirmation, and yeah, I've made some bad decisions on that.
There you go. I love to
But
hear that word
I mean,
confirmation.
I've oh. I did pretty well until this past week. I've lost about 20 to 30% maybe.
Those are all on short terms or long buy and holds or a mixture.
Mixture.
Okay.
Okay.
Gotcha.
Well, thank you all for the feedback. And Miss Steph Lou said, same as Vanessa. She says she enjoys, I guess, learning in general and the Q&As. I feel like, and also too, she says she's been trading for a couple of months. So we really appreciate y'all's feedback. Let me hand it right back over to Miss Diaz, and let's keep getting this learning on.
All right, man. I got all my tools set up. So this helps me. I got my ATR up here, my IV, plus or minus 10%, so I can see where the stock market predicts it can go, and actually gives you that price here, plus or minus 20%. So if we were in a bearish market, this actually tells you the price. Plus 20% would tell you where it could be if it's, it reverses and goes bullish. But basically tonight, the topic was about order entries. A lot of the times some people ask, well, when do I get in a trade? And we kind of went over that. But I guess the actual not technicals of it, but actually implementing the trade, or you might see me say a lot that use the 10 to 25% of the ATR, the average true range of the high above the confirmation candle to enter that in that price range. So we're just going to kind of go over that. And I'm kind of fumbling over my words here, but here. So we're going to use this one as an example. I'm going to take this off. And we wouldn't necessarily trade this as a swing trade because it's right on earnings, which it looks like it was today. We always want to make sure that earnings is out of the way, or at least 14 days out from when we enter the trade, just to mitigate any kind of risk with volatility, because most of the time when earnings are announced, you have a lot of volatility. Price will either gap up, down, or just do nothing. So we're going to do some calculations. If you guys want to write it down, I'll also put this in the chat. But your order entry rules is use a buy stop limit order. It's going to have, with the bracket order, it's going to have 3 different legs to it. So if we wanted to get in here, well, first we'll figure out what 10 to 25% of the ATR actually is. So 10% of 30 cents is 3 cents. So basically we would be 3 cents above this high. So the high is 206. So we would get in at 209. So that would be our buy stop limit. This would be the entry. And then we would have to do a stop, a second order, which would be a sell stop as well. And that's also 10 to 25%. So let's see, this the low, 10 to 25% of the low. Let's see, $1.18, we'll call it 18 cents. Let's see, so where's the low here? Pull up my calculator. $1.95 minus 18 cents. We got $1.77. So that would be our stop. So we got 2 legs of the trade here for swing trading. This basically the entry 10 to 25%. The con of this is that you're giving up a little bit of the move. But the pro of it is you're catching, let's say this was a confirmation candle. You had a confirmation candle right here. And then you would basically get caught into the trade as it continued to go higher or reversed. So boom, that would be your entry. This is your entry, this is your stop. And then of course we have the target. So we would just do like a symmetrical measurement like we usually do. Duplicate it. And this would be our target. Maybe a little bit before that so we can make sure we get triggered out like 274. There we go. So these are the mechanics of it. And to actually place the trade, we would go in, we'd go to trade. Let's see, stock, we want the stock. Let's see. That's not how we do it. Right click, buy custom with OCO bracket. So what an OCO bracket is, it's going to give you the buy stop limit, your sell stop, and your target price at the same time. This is a buy stop. What do we say? So we would do, we could do our stop price. Let's say our stop price was the 209, and we would want to limit it. So let's say the max we wanted to pay this would be maybe like 215. So that would limit what I would be paying for it. So if price actually gaps up, I wouldn't be filled, because I wouldn't want to be filled anyways, because I missed the move. It would be too high. And the probability of it reversing and coming back and touching this previous pivot level would be high as well. So not only that, but it messes up your risk reward ratio, because your stop would still be way down here and you'd have to move it up. So it would be a mess. So this buy stop limit order would actually get you in if price would be confirmed up. Now the stop, we'll just change this to, let's see here. This is your protective stop. What did we say that was?
177.
177. There we go. So this is your protective stop. Oh no, this is, sorry. And then we'll do 274 for the stop here. I want to make this smaller. There we go. 274. Let's say we wanted to get a little higher. So it would be like 275, something like that. And then you'll see what you'll be doing. It says that you're getting a credit, but you're actually not, because that buy stop limit order is actually being triggered first. So you can see here you have the first order, the second order, and the third order. So when the first order actually triggers, if price confirms, then you'll have this order be filled, and then you'll have these waiting to be filled after this gets triggered in. So your stop, your protective stop will be waiting to get filled, and then also your target would be waiting to get filled. Does that make sense? Everybody good on that? Paris, James, y'all got any
Good.
questions?
Yeah, I'm good.
You good?
Good.
So that's actually one of the most conservative ways to get into a trade. And that people say that, oh, I don't have time to, look at the market, this, that, and the third. But in reality, you can set these buy stop limit orders for these swing trades. Let's say the hot list, you add them to your watch list over here, and then maybe it's not ready for confirmation. You can put a buy stop limit order at a price that you want, and then get confirmed into the trade. But if price goes sideways or it continues to go down, then you never really have to worry about it. You don't get into the trade. And then actually, you would actually change this here. I forgot to tell you, good till close. Because if you only put it for the day, that order will only be good for that day that you place it. So we would want to put good till close.
I got a question. This was actually clear to me. I think you covered it before as well in a previous Q&A. But I guess my difficulty sometimes is like Colin was saying, right? The alerts, sometimes they give some really valuable information, sometimes news or whichever. And then, you know, I'll go in and I'll analyze the chart, which I'm getting a lot more comfortable doing so. But there's a lot of times where I'll feel like I feel like if I were to you know buy in right now, I would be buying the top potentially, right?
Mhm.
So what do you do there? Do you just wait? Do you just add it to the watch list and just wait and maybe wait for a retracement, right? A correction, and then invest later, or what's because then at that point I'm like, I don't want to buy, but I do want to buy. And then that indecision leads me to making the wrong decision.
Yeah,
That fear of missing out.
yeah, the
Yeah.
FOMO. Matter of fact, I think I pulled one up. Let's see. I think I pulled one up the other day and I put it in the group chat. Let me see if I can pull it up. Or I don't know. Let me go to the alerts channel real quick. We'll just pull up an alert. Private hot list. Let's see. Let me scroll up a little bit. Okay, WTRH, that wasn't a high volume. TTOO, volume
Use
increase.
one that's doing good for me from the hot list, HES.
HES?
Yeah.
Okay, cool. So let's pretend this isn't here. All this, let's pretend that isn't here. We're just focusing on this right here. So let me maximize.
So I got that one right now, and it's actually been doing pretty well. I
Awesome.
waited for confirmation. I think confirmation was this morning, or I don't know when I saw. I think I got into it today, and then it just kind of started taking off. But like, if I were to buy it today, or if I were to see this today, I probably wouldn't buy it. I don't think, if I remember how I saw the chart, because it looks like it's got already a lot of momentum.
Yeah, exactly. You're already almost to this high over here. So why would I buy the high?
Yeah. So what would you like recommend someone to do? Just wait? Or because that's where, yeah, you're right. It is. It's a FOMO thing. Because then I don't want to wait. You know,
Yeah.
what if it goes up?
And honestly, that's when looking at the charts comes, it's foundational because, or paramount, I should say, because then you'll know like, hey, shit, I'm buying at the high. You want to buy the dip. That's what buying the dip really means. You'll probably buy somewhere right here. Down here, you got a technical catalyst on a rising moving average, and then you got confirmation. So you probably would have triggered in here and just rode that wave up. Not only that, but you can see I could already look at it right now. It's already at a previous pivot zone. Remember, old resistance becomes new support most of the time. Sometimes the market will screw you over. But you can see that price, we always buy at the previous pivot level, break and retest. Those are your best, most high probability setups. If you're buying somewhere in the middle, you're doing it wrong. You buy somewhere right here in the middle, or right here in the middle, or something like that, you're doing it wrong. Sometimes you miss the move, but at least, and that's the con, that's the con of this, is sometimes you can miss the moves, but there always will be another trade. And then this only increases the probability of you making profit. So not to say you can't trade other ways. This is probably just a better, more conservative way to conserve your capital and, capitalize on the movements.
All right.
So yeah, so long story short, if I was day trading this, I would have waited for a pullback to a rising moving average or another pivot level on like a 15, a 5, something like that. So even with the 5, you get more candlesticks, but the zones are still the same, the price levels.
Okay. Another question I got for you too, when entering, sometimes, right, like you've taught me that you should look at the chart in different time frames, right? Kind of, I think from largest to smallest, right? I think what you've told us one of the past QAs. So sometimes the moving averages kind of don't line up. Like it'll show moving averages are all on an uptrend. They're all under what it's trading, right? So that would indicate it's on an uptrend. But when you go into more of an intraday time frame, like 5 to 15 minutes, it could almost be looking like a downtrend. Would that mean to you, like, hey, don't take the trade? This is not
Yeah.
something you want to enter?
Not necessarily, but for intraday trades, you would want all of them to correlate. So when you're trading, you sometimes want to talk yourself out of the trade first before you figure out why you would take it. You know?
See, now that's what I feel I'm doing now. This is why I'm asking so many questions. Because before I would just be all like very I guess aggressive trading. Like, oh, it's
Yeah,
like just
YOLO.
I hope it's gonna be good. I guess because we were so so bullish and everything was just kind of working like that. But
Right, yeah.
now it's like I'm doing it and it's just like I see red and I see red and then just start losing. So I feel like I'm being more careful and I'm really just paying a lot of attention to my entry points. And this doubt or this indecision of like, man, well, I want to make sure because I've too many times I've already entered where I'm entering too late or I'm entering in the middle, like you were saying, where before that didn't really cause a problem because everything was just doing so well. It would always generate profits.
Yeah. Yep.
It's just, oh, and then another thing I've noticed, and I don't know if it's just maybe the psychology, and maybe you guys can confirm, but I feel like runners don't run anymore, right? You get like, they do get a spike in volume and they'll go up in price, but it's like people are just so focused on trying to take any type of profits that everyone just sells really fast.
Yeah. And honestly,
I agree there. Yeah.
yeah, absolutely. And the market conditions have changed. I mean, there's two things going on. One is that the overall S&P is seeing, bearish momentum, price moving downwards. So that's going to reflect and correlate across the market. It's if we see the S&P or the Dow Jones or the NASDAQ going down, we're like, probably, oh shit, you're going to go check your shares. And then everybody already has it in their mind that the market is selling off in other areas. So you're probably going to take profits on yours to secure your too. So that's why that herd mentality comes into play, that psychology, and it correlates across other charts or other stocks, I should say.
Yeah, because I missed out on profits just because it spikes up just for a few, and I'm like, well, maybe it'll continue throughout the day, and it just doesn't. It spiked up, took a jump, and then called it quits, threw in the towel, said I'm done for the day, and then just bounces back.
Sounds like AABB.
Well, what did AABB do? AAB. I kept seeing that come up on my phone on the alert.
I mean, the past few times it's gone up and then taken a dump.
Yeah, it seems like a lot of the runners are doing that, which is
it looks like
it's
right
making me
here.
change my strategy. Like it's making me take profits sooner, and we got to adapt. I guess that's the whole thing about the stock market. You got to adapt to what's going on.
So here's one thing, looking at AABB.
Yeah,
So I can already tell you,
dump every time.
yeah, actually, I see it right here.
So clear.
That's probably where we got the alert. This is probably where we got the alert, and then it took a dump right after, right?
Yeah.
Look at what you have. You have moving averages as acting as resistance. So if we would have got the alert, came here as a trained technical, technician, you would see, oh man, this moving average could act as resistance, as a ceiling. So maybe I shouldn't take this trade. Now, if it broke above it, then that would be a whole different story, right? Because then it has nothing in the way, at least on this time frame. But if we're intraday trading and we're just trading high volume alerts, I mean, we would probably want to be on the 5 or the 2 minute, maybe even the 2 minute. You know what I'm saying? Look, let's drop that down to 2 minutes. So
yeah, because it moves so fast.
It moves so fast, man. It's so liquid. Okay, so even on the 2 minute, it broke through. So the 5 minute would have been a more reliable way to look at it. That would have told you the correct story, but you never really know until it's confirmed. So let's say you got that alert. You want to wait for that candlestick to close, because if we would have got the alert and got into the trade and it closed here below, we kind of would have known maybe something's up. You know what I mean? So always check multiple time frames just to kind of get a different perspective on what price action could do. So let's see here. So the 15, what do we got on 15? Kind of the same thing. Resistance, 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 resistance. Pivot level. pivot level, pivot level.
Yeah.
You'll see it?
Yeah.
So these pivot level, that's why, I like to trade charts. I don't trade everything. I trade charts that are predictable. It just increases your probability. That's all it does. It doesn't, I'm not right every time because the market makers know what technical analysis is and they will use it against you. Okay.
So right now it looks like it's about to hit resistance, and more than likely, if it follows the same pattern, it's about to go down.
Oh, absolutely. It's already in a downtrend.
Yeah.
Now, if we see a change in momentum where maybe price action does something like this. Let me see. Yeah, I hate when it does this. I gotta switch tools. So if it does something like this, that 1, 2, 3 pattern that we kind of talked about a few weeks ago, maybe it comes down to this pivot level here and then continues up. That's a 1, 2, 3 reversal. Not only that, but it's inverse kind of sideways head and shoulders, which is a bearish reversal pattern or bullish reversal. What did we? Anyways, it's going up. It's going to go up. You know what I mean?
Yeah.
So, and it's not always picture perfect. I mean, this is kind of a left shoulder, right shoulder head, or left shoulder, right shoulder arm. You know what I mean? Boom, boom, boom.
Yeah.
So, it's all perspective too. So
It might continue, right? But if you look at the volume, it looks like the volume is a little higher than it was before on any of the other spikes.
but look right here.
Momentum, right?
Yeah, look at this momentum and this volume. The volume is increasing here. But on the bullish days, we had a bullish day here for whatever reason. But on these previous candlesticks, not so much. Not only that, but this candlestick has a high wick or a wick at the top of an uptrend.
Which means the bears are pushing.
Which means the bears are going to fight and push this thing down.
Bears are killing us, man. I can't wait to get back in the bulls. But we got
Good news come out. The summit just took a dump.
Yeah.
we got about 10 minutes left. You guys want to open the floor up for Q&As? Anybody have any specific questions that you need answered this week? Don't be shy. Anything. Trading.
Now, any stocks you guys want us to look at and break them down, give you some advice? Well, not me, Ryan.
About can you check out NNDM?
Was that M as in Mary?
Oh no, N as in Nancy.
M as in Nancy?
No, N.
I know. I don't know if that's from Archer. Has anybody seen that? Huh? Never mind.
What is it? From where?
What was the ticker again, Carlos?
Oh, NNDM.
Oh, DM.
Nano Dimensions.
Yeah.
It looks like they got two. We'll go with this one. Same thing.
Yeah, that's one of my long terms.
In the long term. Well, I mean, maybe it's a buying opportunity. It didn't go below here. I mean, this is on a 5 minute. Let me go. If this is a long term, let's look at the yearly. Oh,
And
shit.
it right around. Kid.
This is the weekly, not too good. But it was trending up. This was kind of a bottom here, 51 cents. So what could happen is it could come down to one of these pivot levels, just as far as technicals go. Let me see. Oh, let's even back the chart up even more. Let's see why. I mean, not only you have this acting as resistance, but you are what other pivot levels do we have here? Let me extend this all the way to the right. I didn't do it. Oh, let's see. So it's kind of lining up with this level here. So we can see that this previous support has become resistance for whatever reason. But based on technicals, you got a pivot zone here, and you got support here, and then it came up and bumped its head on these pivot levels.
Okay.
And we got earnings here too coming up. Look, on March 11th. Depending on what they announce, I mean, it could pop up. You got levels of support that might be coming up, but we need support is not support until it's confirmed. So we can guess all day that this moving average will be support, but we don't know until we get that 3 candlestick pattern.
Till it moves to it.
Yep. So it has to be confirmed. that support because it can blow right through that bad boy. Don't give a damn about no technical analysis. It'll just ride it right through it.
Oh man. Oh, good information, man.
Yeah, so if it's a long term, man, look at those weeklies and those monthlies. It'll tell you what's going on. I mean, I can see why you got in it. I don't know when you got in it, but you could see here.
Yeah, I bought in. It was like 380.
$3.80.
Yeah.
Oh goddamn! What is it? Oh, $7.79. Okay, why is it showing? Okay, let me see. What is it trading at now? 708. Okay, so
Yeah,
you got in at a good price. You're up.
Yeah, it was
Yeah.
trading around 15, like what, 2.5 weeks ago.
Yeah.
Yeah.
200%.
Oh yeah, here we go.
And now yeah.
Yeah, look at that double top.
Oh yeah, there
Pivot.
it is. Yeah.
Pivot,
I didn't see that.
double top.
What is that on the
This is on the daily. So you kind of would
daily?
have
Okay.
known when this price level was rejected. Ah, shit. You know, and then if you would have held on a few more days, you would have seen this faster moving average crossing below a slower moving average. And that's called like a death cross.
And the MACD too, right?
And the MACD too, right here.
Okay. Yeah. I always looked at just like the 4 hour and 1 hour, and from watching or looking at the chat room and watching your videos, I've seen that you go more by the daily, weekly, and monthly for long terms, and I guess that's a mistake I've been doing.
Yeah, I mean, so yeah, with the 4 hours and 1 hour, I would say that's more of a swing trade for entry. Like you would manage your trades as far as swing trades. You would either enter them or manage them on the lower time frames, especially day trades. But that would be like the 5, 15, and 30 minute, the 1 hour and the 4 hour and daily or your swing trade. And then if you're long term, you would look at the monthly and the weeklies. And then sometimes look at your days for entry, your day trade. I mean, not your day trade, your day time frame for entry.
All right.
So I mean, buying at, if you're a long term investor, if you spot a support, maybe right here, or already passed this, it blew through this moving average, and then you got another pivot level here. So draw those pivot levels, and then also, man, if you're using Thinkorswim, I don't know if these other ones will set you some alerts. You know what I mean? Or
Yeah.
you could do a bracket order to buy in at a price that you like. You could do a buy stop limit order. You don't have to do an OCO bracket because it's not a short term swing trade, but you can do a buy stop limit order when price is confirmed to move up. So if it's especially, if it's at support or you get some kind of bullish reversal pattern on a daily or something like that, you're going to see reversal patterns more likely they'll form more and they'll be more apparent on intraday time frames like the 5, 15, 30, 1 hour, 4 hour. The daily's a little bit different. You can spot double tops and stuff like that. But yeah, but if you get any reversal pattern or see a pivot level confirmed, then you can get in.
All right.
Yeah, and set you a stop at your entry. You know what I mean? So that way
I think he's already holding it though. In this case, would you sell?
No, if he's holding
let it go all the way down.
Yeah, if he's holding it, I mean, you could. I mean, it's called catching a falling knife. You could buy all the way down, but why buy all the way down when you can wait for a change in momentum and get an even better price?
Wait for it to bottom out.
Yeah, wait for it to bottom out. You can't guess the bottom, but you
Yeah.
can tell when momentum is about to change. Previous pivot levels.
Yeah, I'll just watch those supports.
Yeah, I mean, yeah, as a long-term investor, support and resistance, that's all you really need.
You got a lot of support and supports to go through before it gets to 380 though. So you're still in the money, I think, right?
Absolutely. Yeah, you got to blow through. Price has to blow through all these moving averages and these pivot levels. 471, I'd probably get worried about right there. But if it's a buy and hold, it's doing pretty good.
Yeah, I'll probably this is supposed to be one of my long terms. I believe in the company, so And yeah, I'll just hold.
Yeah, man.
That's
You got
good.
earnings coming up too, so I mean, you shouldn't care for earnings if you're long-term investing anyway, so it doesn't really matter.
Yeah, I feel like G and his Tesla with this one.
Oh yeah, man. Yeah, gee, he's a long-term investor on that for sure. He don't care what it's doing, he's buying.
All right, guys. Well, it's about that time. It's been informative as usual. I definitely appreciate everybody, especially Ryan, man. Thank you for giving us, your time to help us and teach us these things, and everybody for coming out. We really appreciate you guys, because if there was nobody in this room, and I personally forgot to give the link out, but if nobody came, it would be a really weird session. So thank you guys for coming out.
Yeah,